Hello and welcome back to the Trinity Student Managed Fund podcast with me, Emanuele Roncalli di Montorio-Veronese, where I speak with leaders in the world of business, finance and technology to give our students a better insight into the careers we may wish to pursue. Today I'm excited to sit down with one of the most respected leaders in global finance, Mr. Jim Esposito, who is the President of Citadel Securities. Jim was previously co-head of the Global Banking and Markets Division at Goldman Sachs, where during his 29-year tenure, he served on the Management Committee, co-chaired the Partnership Committee, and was a member of the Diversity and Inclusion Committee. Previously, Jim was co-head of the Global Investment Banking and Global Markets Divisions before they were combined, and earlier in his career was co-head of the Global Financing Group. Jim earned a Bachelor of Arts from Brown University and an MBA from the Tuck School of Business at Dartmouth College. Jim is a trustee at Brown, serves on the Board of Overseers at Tuck, and is a member of Beat the Streets New England. I really hope you enjoy this insightful conversation with Mr. Jim Esposito. Okay, so I'm very excited to welcome Mr. Jim Esposito, President of Citadel Securities, as you would have heard in the introduction. So Jim, welcome to the podcast and thank you for taking the time.
Thank you, Emanuele. I'm delighted to be here with you, and your interest in Citadel Securities and me is noted. I think we came together because you actually dropped a handwritten note off at my office, which found its way to me. So I thought your persistence and passion to get me on your podcast was out of the ordinary, and that's one of the reasons why I'm here today.
Well, thank you very much for responding to it. And I suppose to dive right into it, I think the best place to start is if we rewind the clock to your even younger days. I read that you were a high school state champion in wrestling and then went on at University of Brown and competed at varsity level where you studied economics and political science. Could you bring our listeners back to those university days and what your thoughts were in terms of what you wanted to do in life?
Sure. I'd be lying if I said when I was at university, if I had some sort of preordained plan as to exactly what I wanted to do when I graduated. In fact, up through my final year at university, if you had known me back then, I was convinced I was going to go to law school to become a lawyer. I had taken the law school entrance exam. I happened to score well on it. And so for me, that was affirming that my life's ambition should be as a lawyer. And then just really randomly, I went home over half-term break. One of my older brothers at the time was working on Wall Street, and he had gone through a 2-year analyst program at an investment bank. He was singing the praises of why that made sense. And that one intervention, just almost, somewhat randomly from a family member in that example, really altered the course of what I thought I wanted to do. And then I had to scramble. I found a job at Salomon Brothers, and the rest in some ways is history. But while I was at university, I just didn't have all that specific of a roadmap or a game plan.
And when you went on to Salomon Brothers, was it, apparently clear that investment banking is what you wanted to do, or were there other areas, more broadly speaking in finance, which, yeah.
Sure. For any of the listeners who are students of financial markets, appreciate Salomon Brothers might not be a name that some of the younger listeners will remember. But if you ever read Michael Lewis's book, Liar's Poker, it's written about Salomon Brothers. And Salomon Brothers was an incredibly colorful investment bank, known more for its bond trading prowess than maybe their investment banking skills at the time. But Salomon was a big swashbuckling trading firm. I ended up in the mergers and acquisition department, and I spent 2 years doing M&A. And it's not that different than what you hear about these investment banking analyst jobs today. It is an intense job. You work, and I worked very long hours. You get kind of thrown into the fire almost from day one. And coming from what was a liberal arts university, which is Brown, where I majored in political science and economics, I didn't have modeling experience. I didn't have a lot of accounting experience. I wasn't steeped in, the skills required. I think what allowed me to survive at that time is I was a competitive person. Here's where maybe the sports does resonate a little bit. I was a college wrestler. Wrestling is a demanding, it is an intense sport. It's a one-on-one interaction. And in wrestling, I learned how to lose. I learned how to pick myself back up and go again. And a lot of those life skills were applied my first 2 years at Salomon Brothers. I didn't just make a couple of mistakes. I made countless mistakes. And every day I just tried to get a little bit better. People were patient. There were a lot of people that helped me along my way. But the point of that is, after 2 years, I had accumulated a very diverse set of finance and modeling skills that served me well. But the quid pro quo for that was I worked exceptionally hard over those first 2 years.
And so the sports, the wrestling really was kind of instrumental in bringing that resilience and that grit to the job, you'd say.
Yeah, look, I don't think everyone has to be an athlete that ends up on in investment banking. So I certainly don't want to imply that. For me, in terms of my own journey, that wrestling part of my life was very formative. It was very, very formative because learning how to compete, learning from your mistakes, being able to lose, and this notion of going again, for me, that's sort of intertwined with my entire career journey. I was a slow starter in many ways. I wasn't necessarily the number one person in my analyst class that first year, but it had an ability to stick with it, to keep going. People talk about an ability to grind. I think I was a grinder back then. And those sorts of life skills served me well. For me personally, yeah, I probably learned more of those on the wrestling mat. But I think for others, I think it is important when you're kind of going through your early career to kind of reflect back on what can you borrow from your previous experiences that will apply to that job situation. So anything in your life where you overcame obstacles and challenges, I think that ends up being super important early in your career.
And then moving on to now, because you obviously pursued an MBA, and this is a debate at the moment. People are considering should they do a master's or the kind of 2+2 MBA. What is your perspective on this and an MBA's value today?
I think it's a very personal decision. You absolutely don't need an MBA to be successful at Citadel Securities or on Wall Street generally. So possessing an MBA is by no means a prerequisite to any type of financial services role. Now, with that said, being a lifelong learner, being intellectually curious, I think is an incredible skill. I actually ended up working at Salomon Brothers for 3 years. So I did 2 years in M&A. I took a third year on the fixed income trading floor. And after 3 years, I was pretty burnt out. I had worked incredibly hard. I needed a break at that point in my life. I wasn't yet ready to fully commit to the idea of working full time in that environment. And so going back to get an MBA allowed me a chance to look around to make sure there weren't other industries and other roles that I might have wanted to do. It did allow me to mature, accumulate a bunch of different skills that I didn't possess. It made me more well-rounded. I then ended up at Goldman Sachs after getting my MBA. So I kind of went back to a similar type environment, but I didn't have to. And I think for me, the ability to explore other careers, to try them on for size, then allowed me to come back to Wall Street fully committed. I was convinced. I had looked around, I had explored, I had talked to people, I had interviewed in different industries. when I got to Goldman Sachs, I was all in. I was ready to commit. So for me, I needed that process of elimination to convince myself. So the MBA had value that way as well.
And then focusing kind of on more recent times, last year you made the big decision and joined Citadel Securities. I'd love to know, what was that decision like after spending 3 decades at Goldman Sachs? And so could you give us some insight into that and why Citadel stood out to you?
Yeah, I mean, it was kind of a really incredible period in my life. I had 29 incredibly positive years at Goldman Sachs. I owe the entirety of my professional career to the senior people at Goldman Sachs who supported me along the way. And there were many important supporters of me over those 29 years. So I had an incredibly positive experience, positive career at Goldman Sachs. I realized at the age I was that I had one more opportunity in my life to go out and explore and do something different. I think I did something hard, dare I say, something brave, and I don't mean that arrogantly, but I ripped off the Band-Aid and I just decided I was going to see what else was out there. And I didn't have anything specific in mind, but when I left Goldman Sachs, I kind of had a checklist of things that I was hoping to achieve. I wanted an environment that was far more entrepreneurial, ideally one that was leveraging, some of the new trends in technology, whether that was AI or machine learning, but a technology-driven first, kind of platform. And then, like Goldman Sachs, I wanted to be surrounded by incredible people, dynamic, brilliant people. And so as I started to explore, literally the first opportunity that arose was Pong, our CEO, and Ken Griffin, our founder. The day my announcement came out that I was leaving Goldman Sachs, Citadel was indeed the very first phone call I got. It was hard not to engage. I didn't really want to engage because I wanted to detox and have a period out, but both Ken and Pong are incredibly convincing and really don't take no for an answer. So I hatched a plan to come to Miami to visit with both of them. And I have to say, I knew a little bit about Citadel Securities when I was at Goldman Sachs, but as I got talking to Pong and Ken, Citadel Securities is an incredible, mind-blowing place. How and where, we make money is completely different than the big banks. And it's some of those trends that I was alluding to earlier. Our ability to scale our firm, with technology, we trade close to 25% of all US equity volumes, and we only have 1,700 people. So the platform is operating at such scale and efficiencies. If you listen to what a lot of the big banks talk about today, they're hoping to use AI and machine learning to get more efficient. Citadel Securities was built as a technology first driven organization. From its founding, it was using large language models, machine learning. It was incorporating, some of the most brilliant minds in quantitative, research. We have 1,700 employees. About 300 of our employees have a PhD, and these PhDs are in mathematics, statistics, physics, computer science. And so ours is a firm combining literally some of the brightest minds on the planet with the biggest trends in technology. When I saw this, when I heard it, when I spoke to Pong and Ken, it was exactly what I was looking for. All of it felt very right way messaging when you think about, the proverbial skate to where the puck is going, not to where it's been. For me, Citadel Securities kind of struck me as, all of the trends that I saw playing out, all of the things that I thought were going to be important over the next decade, Citadel Securities was literally built on that foundation.
I suppose this decision was made, this is at a very high level, and later on in your career, but if you were to take a step back into the shoes of someone, say in that investment banking program, and they're faced with I'm sure during your career as well, you had many options whether to leave or continue and so forth. What is that checklist for someone in your view in that analyst program, say at Goldman or a bank? And what factors should you be considering earlier in your career, whether to stay on at the firm or
Yeah, and look, I don't think everyone needs to have a 29-year career to be successful. I don't know if there's a right answer to your question, but I guess what I would put forward is the following. When I look at my peers as I was growing up at Goldman Sachs, many of them left what I would say was prematurely. They were chasing the new thing, the hot thing. Anyway, some of them ended up being wildly successful, and some of them ended up leaving Goldman Sachs prematurely. And so I didn't have an obsession that I always had to be in the hot area or the new thing. I mentioned earlier that I possess an ability to grind, and I thought grinding was an important skill in one's career. I knew I had one opportunity to leave Goldman Sachs, one of the preeminent investment banks on the planet. And when I left, it had to be the perfect time and, for the right reasons. And so for me, I never felt the need to do that until I got to this kind of inflection point 29 years on. I liked the fact that I was growing and accumulating a diverse set of experiences. When I was at Goldman Sachs, I moved around a lot. I had the benefit of co-running investment banking for one period. I co-ran capital markets for a period. I co-ran the markets business, so equity and fixed income sales and trading. I got to see a lot of different things when I was at Goldman Sachs. So I never had the need to leave because I was learning and I was growing. So I think to conclude, the answer to your question, as long as you're continuing to learn and to grow, I don't see the need to leave. 29 years on, I did finally get to that place where I got about as close to the top of the mountain as I was going to get. I had seen and learned about all that incredible firm Goldman Sachs had to offer me. For me, it was finally my time. It was finally my time. Citadel Securities, in a perfect blending, allowed me to take those 29 years of accumulated skills and experiences and apply them in a very different way. And for the avoidance of doubt, I don't have a PhD in math or statistics. And so I'm very different, compared to most of the senior leadership team at Citadel Securities. I've brought a complementary set of skills built up over 29 years. Citadel Securities was interested in those skills because we're standing up new businesses and we're growing very rapidly. And so, as I was saying earlier, this new role checked a lot of boxes, but it was also consistent with the core skills that I possess. So, I could have gone off and done a lot of different things. The way I thought about it is, to be successful, it would help if I could borrow and lever the skills that I had built up throughout my career. This role is the perfect blending of all of that.
And I suppose to double click on Citadel Securities, because there is such a an aura and presence around, and even just hearing that story there, that the first call was Citadel. So clearly, talent acquisition, which is something I'd love to talk about, is a top priority for Citadel Securities. But I suppose if you could identify one, you've mentioned talent and the current PhDs, but if you could identify kind of one key differentiating factor or advantage, what would you attribute that to?
Okay. I'm not sure I can limit it to one, but at the very top of my list, and I've mentioned both individuals, Ken Griffin is a once in a generation talent. He literally is the greatest financial mind of our generation. And so the opportunity to, work for and with Ken is just an incredible experience. It's like nothing I've ever seen before. And, that's just an opportunity that you can't pass up. Similarly, Peng Zhao, our CEO, has really been instrumental in building and ultimately scaling and growing Citadel Securities. When we talk about the trends around levering technology and integrating quantitative research into market making and investing, Pong sits at the epicenter of that. And it's been an incredible partnership for me. Pong and I get on incredibly well, and we couldn't be any different. Pong grew up in Beijing, China. I grew up in, northern New Jersey, outside of New York City. And we laugh a lot because we think in many ways alike, but our life experiences couldn't be any more different. And at one point, if you were to line up as a thought experiment, Peng's CV versus mine, there's no overlap. There's like literally no overlap between the two. And yet we have an incredible bond in a relationship because it's the complementary skills that each of us bring to bear. And I learn every day an incredible amount from him because what he's doing is so different than what I did before. I like to think Pong learns a little bit from me because, again, my prior skills and experiences are not stuff that he necessarily would have been involved in before. Going back to the point, that's when I knew it was my time to change career paths. I've been at Citadel Securities now for a little over 6 months, and it has exceeded my expectations in every way. And I really feel like I'm a part now of helping to shape the future of financial markets. I really feel like I have a front row seat now to, again, all these major trends. When people talk about large language models and how you're going to lever them in business, this is core to who we are as an organization. And so it's been an incredibly eye-opening but equally rewarding experience. So, what's the superpower of Citadel? It's that leadership team with Ken and Peng, and then what that exudes and infuses through the entire organization around these areas I just mentioned. It's really the perfect blending of all of that, and it's been a very rewarding experience.
And then I suppose just rewinding the clock back again, could you bring us back to the early days at Goldman and emerging markets, debt sales, and could you talk about the early teams and perhaps, advice? Yeah.
Look, I think people talk a lot about, are these traditional Wall Street jobs and careers the same as are they going to be the same as they were when I graduated way back in the day? Sometimes people worry there's going to be a down period. By the way, obviously we're in a market right now where equity markets have grown much more challenging the past week. I'd say a couple things. I learned the most at Goldman Sachs during those very, very difficult and challenging markets. So for me, that 2008 global financial crisis was the most formative experience of my career. I had made partner of the firm 2 years prior. My role at the time leading into the financial crisis of 2008, I was responsible for a lot of our capital markets, Goldman's capital markets businesses. And one of the things I was doing was helping fund Goldman Sachs's own balance sheet. So I literally had a front row seat to the funding and liquidity crisis that was playing out for financial institutions, the closer you were in '08 to seeing and understanding what was actually going on, the more scared you were by definition. It was existential. Anyone who tells you the big banks wouldn't have gone under if there wasn't, the government aid and support, I think would be lying. It was day-to-day trench warfare. At Goldman, when I was there, we were living on the edge, and it was scary. It was emotional. And then I got to see what represented incredible leadership. And I watched people, kind of step up and lead through a difficult emotional time where they had their own issues that they were sorting through. Watching Lloyd Blankfein, Gary Cohn, Goldman CFO at the time, David Viniar, was really a lesson in leadership. And Lloyd, who just was steady, unemotional, came in every day and just looked at the large list of problems that he had to solve. And he used to say, we're not going to get through all of these today, but we're going to make this pile a little bit smaller. And that's all we can do is just keep, doing the best we can, addressing the issues that the day brought us. And there'll be better days, but we don't know when. And, I saw an incredible group of people come together to try to support the firm, to support the clients in the best way they could. I take a lot of that with me, and I don't take the success of Citadel Securities in this moment, as a given. I think you have to have a couple of those periods in your career to make you a good and thoughtful risk manager. I worry that we just went through close to 15 years of extraordinary monetary and fiscal accommodation, not just in America, but around the globe. And, people forget the lessons of a year like 2008, and there were, other years prior to that. These are valuable lessons. We had a week that kind of reminded us of this. You learn what it means to be disciplined. You learn what it means to be a good risk manager. And so my early years at Goldman happened to coincide with a handful of these very challenging market periods.
It's really fascinating to hear, just because most of our listeners, myself included, we were, very young when this was happening. And even, looking at the history of Citadel and hearing Ken Griffin speak about it, it was a challenging time for Citadel. But now, obviously the most successful hedge fund in history.
Actually, I formed an initial relationship. Don't want to claim it was particularly deep with Ken during that 2008 period. And so Ken and I spoke a lot during that period because, again, I was central to liquidity and funding of financial institutions and markets more broadly. And so Ken and I had a reason to come together. And I suspect, although I never asked Ken, he probably saw me operating in a challenging environment. And that's when somebody gets tested as a leader. And it was an interesting time, to kind of work with Ken, again, trying to resolve a bunch of different issues that each of our firms was grappling with.
I suppose double clicking on this just because it is so relevant now. I mean, we've seen the volatility over the past few days and last week. On a personal level, could you tell us what is that like waking up, and seeing in 2008, how you kind of processing it? Is it just going in with the list of things you have to get done and, attacking it like that, or what is kind of your strategy?
Look, I think it's first of all, your strategy has to incorporate and reflect on your risk management decisions leading into this moment. And that's typically the mistake that most people make, which is, they project and assume the robust market conditions will last forever. and everyone starts stretching in terms of being out further risk categories from where they should be, and they end up, taking on risks that ultimately, they can't afford to take on. So we think a lot about 2008 and scenarios like that in the way we risk manage Citadel Securities. And so we don't assume that the market's going to be the same as it was the day before, and we model and we shock and we sensitize all of our exposures that we hold on our balance sheet to incorporate. We don't care what the event is. We don't think we're particularly good at predicting, is it a tariff war? Is it a war around the globe? Is it a global pandemic that's going to cause the markets to gyrate? We're not particularly good at predicting that. We kind of assume if you hang around long enough, sort of every bad outcome ultimately will happen. And then you have to make sure you can sustain that period. So scenario analysis is important to us. And we think through, what would be like the worst thing that could happen in terms of our current set of exposures. And if that thing did happen, what would it mean for us in terms of maximum losses or funding and liquidity? And then we try to size our positions and size our balance sheet to reflect that. I think, again, a long career is important, and having lived through some of these moments, it doesn't feel that way in the moment. But to your point about the first week, I'm not saying I'm happy it happened for our people. Please don't misunderstand that. I will say our younger people who are tasked with taking risk and managing positions, they will be far better risk managers 3 months from now than they were before the market tantrum around tariffs. And so it doesn't feel that way when you're living through it. And then, of course, you never think these periods are going to end, and they always do. But I think that sort of battle hardening that takes place through difficult market tapes makes us better professionals, better risk managers. Excuse me. And in that is a valuable lesson.
Could we double click also on your time at Goldman? Because you obviously held several different leadership roles and you had a highly successful career there. I'd love to know, what made you, what are the factors that made you so successful? You mentioned your work ethic and so forth. What do you think stood out is what I'd love to know.
I think I had an ability to kind of operate and get on with a bunch of different types of personalities operating in a cross-cultural context. So I had worked for about 14 years in London while I was at Goldman Sachs, and London was a melting pot for different cultures to come together. And I think I had a type of personality where I was able, but equally importantly, to get people to collaborate. And I think I had an ability to, assess a business, figure out what wasn't working, try to come up with a slightly refined or better business plan, but then importantly, get everyone in the business to feel ownership and be invested in that plan. And then to kind of set a mentality for the people in that business that we're winners and we're going to win. And they get invested in not only the business plan, but as we start to, accomplish some of the milestones in that plan, that there's a sense of winning. And again, I have to say that the sports analogy here matters, but you don't have to play sports. I think the vast majority of people that I've come across with in my professional career want to play for a winning team. And they respond well to that. And so motivating people and getting them invested in the task at hand was something I did reasonably well. And I thought about, I took on a lot of different roles and assignments in my career. I always brought that same playbook to bear, even it was a very different assignment or a very different business. And I think people want to feel a part of a team and they want to feel a part of making progress and winning. It's easy to dismiss everyone on Wall Street. They're here because they want to make a lot of money, and they complain a lot when they don't. Of course, there is some truth in that. But my own experience was more people wanted to feel a part of something, and they wanted to feel like they're building something, and they wanted to feel a sense of accomplishment. And again, they wanted to win. And if you can inject that winning mentality into the group of people that you're leading, I think then you get, kind of the collective all coming together to kind of support your plan. And so unlocking the talent that exists in these places, Citadel Securities, we have incredibly talented people. That's a given. How do I unlock that talent, get them, marching in the direction that we think makes sense? That's the critical role of a leader. And so, yeah, as I suggested earlier, it wasn't my quantitative skills. It wasn't my ability to price an option. I think for me, my success was a lot about that collaboration and ability to bring people together, to get them excited and motivated to build something better than what existed before.
And I suppose, even hearing you now, you have a strong interest in AI and technology, technological advancements, and you really prioritize this on the trading floor at Goldman. I'd love to know kind of how do you see this emerging over the future, and more specifically, how do you think it's going to affect, roles in banks?
So look, I'd focus on Citadel Securities. I think these trends are only going to accelerate, get more acute. We as an institution don't at all think that in any way machine learning or AI is going to dramatically change the headcount that we have. We think our quantitative researching capability and the best and brightest minds that we attract are more important than the AI itself. And we fundamentally believe that. Now, the point of that is, though, I already said, our firm has already successfully scaled technology, and we run one of the most efficient trading platforms on the planet. And so for us, we can get better and better at what we do with more computing power and leveraging AI in a more thoughtful manner. But everything here starts and stops with our quantitative researchers. They are core to who we are. And so, you need brilliant minds to ask the right questions. You need brilliant minds to, think around corners. You need brilliant minds to understand, even though that event hasn't happened in 50 years and it's not in the sample set of data that the AI is reading, that could still happen. And so everything we do is intertwining our brilliant quantitative researchers with the best technology. But for us, it's the brilliance of our people that outweigh, the growing trends around that technology. Banks might have a little more work to do. There's probably more scale and scope for them to grow more efficient, leveraging AI and large language models. To be fair, we just started in a very different place. And I want to be fair here. Citadel Securities isn't burdened with a legacy technology stack that was developed, 50 years ago. And so our ability to kind of start market making across global equities and fixed income markets with a robust technology stack as our starting point, in many ways is a superpower. Some of these banks have been in business 100 years, they've done multiple mergers, and you're putting creaky legacy stack on top of somebody else's, and you're trying to integrate that. They have a bit of a Rubik's Cube that they're trying to untangle to no fault of their own. We had the luxury of starting with a clean sheet of paper. And again, that's led us to be such a big part of global markets, yet have a very modest headcount. And so, when I look at, kind of what we process every single day, we trade about $500 billion in global equities every single day. We account for 35 to 40% of all US retail volumes. I mentioned we trade close to 25% of all US equity volumes. We trade more than 20% of the US options market. We're big, and we're active, and we're a big part of what goes on across fixed income and equity trading markets. But our ability to leverage and scale our technology platform is super important.
And you mentioned the brilliant people there. How do you identify talent? Clearly, it's easy to attract talent, with the success and scale. But even going down to an interview, I'd love to know, what are you, asking to identify? Yeah,
depends on the role. And so for our quantitative researching roles, there is more of a problem solving nature that one can test. So you can certainly look at the person's academic accomplishments. Again, I mentioned we have around 300 PhDs. So you can look at the academic body of work. The problem solving nature is important, and different interviewers get at that in different ways. But I think there's, a discussion around how does somebody's brain work, analytically to solve a complex problem. We literally like to think we have some of, if not the most complex financial problems to solve. Why do some of the brightest minds in academics want to come to Citadel Securities? They're problem solvers, and they like to solve complex problems. So we look for and we test for that. And then look, the intangibles are super, super important. And so this notion of some of the stuff I mentioned earlier, can somebody collaborate? And can you demonstrate that through your past experience on your resume, that you're capable of getting on and working in a constructive way with others? There's not a problem we solve here that a single individual is responsible for. So way more than in academia, we have teams of people solving big, giant, complex problems. You have to be able to work on a team. This ability to be nimble and to be able to adapt and evolve to changing circumstances is super important. You can't be entrenched or dogmatic in your thinking. And so we interview and test for, can somebody think on their feet? I don't care if you can solve the mathematical problem I might ask you. I want to understand how you might approach it. What's your framework for solving a problem is more important than did the individual get the exact right answer. And so I think it's an amalgamation of these different skills. For me as an interviewer, and it doesn't mean it's true for everyone at Citadel Securities, those intangibles are super important. I mentioned this idea, can somebody grind? Has somebody overcome a challenge, a difficult obstacle in their life that they figured out a way to, to kind of overcome? I personally like people like that. Because in your career, I promise you, not only are you going to make countless mistakes, you're going to get knocked down. You're going to get marked to market in a way that you're not happy about. You're going to think you're more ahead or better than you are. And can you take that hard feedback in? Can you listen and understand what people don't think you're doing well, And are you able to action that hard feedback and to actually get better? That's super important. And if you're capable getting a little bit better day after day after day, if you stick with something like I did for 29 years in my prior role, at the end of that, you're going to enjoy some success. But if you knew me the first couple of years, it was not at all a complete or even pretty picture. And so I think sometimes university students make the mistake. They look at the finished, shiny product who's the CEO or president and the person who's in that position, and they assume that person always possessed those requisite skills and they were always that polished and they were always that perfect. I promise you they weren't. I can only speak for myself, but for me, it was a series of making mistakes, of failing, of learning, and then making new mistakes and trying to figure out what I was actually good at, what role would I thrive in. And so I was moving around within an institution also to try to align my own skills with a role that would match them. And I think that's super important as well. Self-awareness in a career goes a long, long way. I think I had a decent amount of self-awareness. I understood what I was good at. I understood what I wasn't good at. I understood what I liked and disliked. And I always opened and availed myself to taking in hard and critical feedback. And I tried to get a little bit better when I took that hard feedback. Some people are less good at either receiving or actioning hard feedback.
Did you have a mentor which helped with this, or was it more of a kind of self-learning process, would you say?
Yeah, I'd say in my career, I've probably had a half a dozen formal mentors assigned to me. And for whatever reason, every one of those relationships failed, atrophied, and didn't work because it was, assigned to me. What I found far more valuable for me was I had a lot of important supporters, and these would be people that were senior to me that I sought out, and I concluded I can learn something for that person. I watched that person give a speech at town hall. I observed that person in a meeting. Wow, they're good. I want to learn from them. And then I would proactively attempt to build some form of a relationship. I think I consciously thought about that in a way that if I could make it more of a two-way street where ideally, even if the person was senior, they too were getting something out of that relationship, then that relationship would thrive, it would last, the person would be emotionally invested in me. And I definitely benefited from a number of those types of senior relationships. I find today I'm more senior. I learn a hell of a lot from our most recent graduates. By the way, I learn a lot about technology. I learn a lot about the things we're not good at. So it's a mistake to think because I'm president of Citadel Securities that you can't build a relationship with me and there's not something valuable you're doing in your role that I'll benefit and learn from. But you have to have some courage to kind of open yourself up to try to start that relationship. And I took some risk that way. By the way, I tried in many times to build a relationship and it didn't work. But I can think of a decent number of specific places where senior people gave me that hard feedback. And by the way, it wasn't in a review that lasted for 45 minutes or an hour. Sometimes the best feedback I got in my career might have been a 1-minute phone call. What you said in that meeting was dumb, and here's why. You should have done this or that instead of what you did. Here's what people think about you, and here's what you should do differently. a lot of the best senior relationships that I built up were people who cared about me, but equally were very direct and very blunt with their feedback. And those small tweaks around the edges make a huge difference in your career, along the journey. And so senior supporters, instrumental, incredibly important to my career. In my case, formal mentors that I were assigned didn't really work.
I'd love to know who inspires you today. You've obviously worked with some of the greatest investors. Obviously, you've mentioned Ken Griffin there. I'm sure you've met so many interesting clients throughout the 3 decades at GS.
Look, I think it would be a type of person, and again, because I already, spoke a lot about my, my strong views on just how special and differentiated both Ken and Pong are. I think it's people like Ken and Pong that have an ability to want to keep learning and growing and doing better themselves each and every day. And so when I look at the success of Citadel Securities and the growth that we've experienced, I'll say over the past decade, but even over the last 2 years, Pong is as ambitious as a first-year analyst out of college, and he's keen and eager to learn from me, and he wants to understand the things that I'm trying to drive in the business and how and why it works that way. So senior people that continue to possess that intellectual curiosity, for me are amazing. And I've met many CEOs of major corporations who are that way, many great investors. And so that continual learning journey and that ability to want to keep getting better really resonates with me. I think Citadel possesses that in spades. That's a direct result from Ken and Pong's leadership and the culture that they set, but it doesn't mean that's unique to us. People who want to keep expanding and growing, I love to see that. It makes me that much more ambitious and that much more passionate. And I feel very privileged to be in that type of place where I am at the moment.
There's so many lessons here, and I have a lot more questions I'd love to ask, but I suppose wrapping up, if you were to give advice to someone in university today, I know it's very broad, but to make it more specific to going into a career in finance or banking, what would your advice be, or even to your younger self?
Yeah. Take advantage of all that's on offer at these large financial services firms. Most of the jobs in the early part of your career are going to be demanding. They're going to require you to work very, very long hours. I saw a lot of my peers get caught in narrow lanes and didn't always lift their head above the parapet and really understand what their contribution meant for the deal, meant for the division, and meant for the overall firm. And so I developed, I think, a wide and diverse understanding of what a large global investment bank's role is serving the global economy and society and clients. And I was curious that way. That helped me move around a lot to different roles, divisions, geographies, and I think it was important. And so if you take an entry-level job at an investment bank, I do promise you your first year, you're going to be so busy. You're going to be a little bit overwhelmed with the work. You might miss the forest for the trees, and I think that's a mistake. And so somehow you have to balance all of that and be curious enough, because your actual role might not fit you perfectly, but just down the hall or on another floor of that investment bank might be the perfect job. You owe it to yourself to understand all of the roles, all of the responsibilities, how the different pieces of the organization fit together. And I think it's a big mistake to get stuck in a narrow lane early in your career.
And final question, you mentioned in your farewell post on LinkedIn a book recommendation of The Alchemist. Do you have any other recommendations or final bits of wisdom to impart on our listeners?
So I'm a passionate reader, and I'm proud to admit I don't think I've ever read a business book. I don't read much nonfiction. And so I'm a big reader of fiction and, all the great novels and all the great authors. I think I took from that an understanding or greater understanding of the human condition. I think I took from that maybe absorbing an ability to have a certain amount of EQ and to understand, kind of what made people or what makes people tick. So for me, I found that those leadership lessons oddly prevalent in fiction because it helped me understand myself better and it helped me understand how people came together and how people really thought about the world and their own experiences. So no specific recommendation, but for anyone who thinks fiction can't have an important role in a business context, I think they're wrong. It's greatly benefited my understanding of myself and being a leader at a large firm.
So our listeners in the library, don't just ignore the fiction section now. Go past it with some consideration. Well, Mr. Jim Esposito, thank you so much for the time. I really appreciate it on behalf of the fund.
Thanks for reaching out, Emanuele. I enjoyed the conversation.
Thank you very much. You have been listening to the Trinity SMF podcast. You can find more of this podcast on our website, www.trinitysmf.com, and follow us on our social media to find out more about the podcast releases, upcoming events, and much more. Thank you again for listening, and stay tuned.